Hey guys, Justin here with a data dive. Today I thought it would be interesting to look at Facebook. So, this is a deep dive stocks report, and this is VOEX for Facebook. And if you're not too familiar with VOEX, that's okay. The main takeaway for VOEX is that when VOEX is above the top horizontal line or below the bottom horizontal line, the stock is typically considered unstable. So, classic example, we see that in September of 2021, VOEX went from being quite inhibitorily unstable, so the price action was being worked against. VOEX fell through the floor into the propagation zone, and the price proceeded to fall. That's super classic VOEX behavior. And we see this again in January of 2022 when VOEX fell into the propagation zone again, less dramatically, admittedly, but less than a month later, Facebook took a nosedive, falling 33.66% to date. And what's cool is interesting rather, on this date, so VOEX fell on the 18th into the inhibition zone. Oh, shaky camera. Into the inhibition zone. And if we go down at the snap graphs, so the snap graphs take the VOEX behavior and maps it with historic returns and then what the price action should do. We see that the 1 month is negative, so the snap graphs are indicating that this VOEX behavior was highly indicative of negative returns over the next month, and the same for the next 2 weeks. So 10 trading days, 2 weeks, same for 5 days, and obviously the same for 1 day. And it seems like this has been holding relatively true, right? Like Facebook obviously fell significantly throughout the next month. Then moving back. So the question today is, so that's kind of the backdrop of Facebook. So as the price has been rising since March of 2021, VOEX wasn't too happy, right? Like it was rising into the inhibition zone. The system finally cracked, Facebook dropped, and then thankfully VOEX gave a pretty healthy heads up that there was going to be a significant price drop. But lately, it seems like VOEX, the trend, this tan line right here, is starting to move back into stability, which is some pretty good news for Facebook, and probably long overdue, right? Like it's seen quite a beating. So the question today is VOEX hinting at a rising stability, and if it is, where is the stability coming from? So let's take a look. Moving to the snap graphs, unfortunately we still have pretty significant returns indicated, but we're neutral now on the 10-day, positive on the 1 week, and neutral on the 1 day, which is significantly better than it was a month ago, right? Where it was negative, 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 negative. That's not too good. So the snap graphs are improving, we will say, but still pretty negative returns indicated on the 1 month time frame. In terms of the expected price range, so these dotted lines right here represent the 68% movement probability for a stock. So the upper limit and then the lower limit, those are the two dashes. And usually you want to see a stock behaving well, like hanging out right between these two dotted lines. Obviously, during the big drop, Facebook fell through those dotted lines quite significantly, right? So we would say this is not good behavior. But recently, even though Facebook has been declining relatively steadily, notice that it doesn't really peak beyond those dotted lines. So it doesn't really move beyond the market's expectations, even during these price depreciations, which is always a reasonable sign. Volatility obviously has increased since the price fell in February. I'm trying to decide if the vol of vol, so like how much volatility itself is moving, is significant, but it seems like Facebook for some reason always has a pretty decent vol of vol. I would assume that Facebook has a lot of dealer long puts on it. So the takeaway here is that Facebook, although still declining, is still pretty well behaved. Shorting has been increasing, but this may have more. We're going to see if this is real shorting or if this is shorting because of some hedging pattern going on. But takeaway is shorting is increasing, so put that in your back pocket. For the options layout, a relatively not too good of an options layout, if we're being honest. Usually you would like to see a lot more calls down here and a lot less puts up here. So the normal distribution of options is kind of like a normal distribution here. So it kind of should go like this. And then as you approach the strike, and then as you move away from the strike, it moves down. And then the puts should really only be out of the money. But we see here we have a lot of in the money puts. Those can kind of mess things up a little bit. And in terms of, so this is the options layout as it is. And then this is over here, the options change. So how the options are changing. The bars represent the change from the day prior, and then the lines represent the daily average change for the past month. So we see like for the past month, lots of out of the money calls have been being opened, but very few in the money calls. It seems like for the puts on both sides of the current price for the past month have been seeing like a pretty healthy increase. But this pattern here is concerning. You want more of this and less of this. In terms of if we move on to the numbers, so Facebook is in a gamma squeeze, but it is kind of easing up, right? So over the past month, the average delta on Facebook has been negative 227,000. So that means every time Facebook moved down by $1 or 1 point, 227,000 shares had to be sold immediately just to hedge all the options. Ideally, you want this to be a positive number so the gamma squeeze can end. And maybe it seems like it's climbing up, right? We've reduced our short delta by 50%, it seems, from the average for the month. So it's not bad. Volume seems relatively insignificant. Shorting seems insignificant. The good thing is, so back to the shorting, we've seen this increase in shorting. I would venture to say that the gamma squeeze probably started probably around January. Let's see. See, this is much nicer. This is from a month ago. We have a decent amount of calls that are in the money and fewer puts that are out of the money. So yeah, so if we move to right before the crash on the 18th, right when actually VOX dipped into the propagation zone, we see that was actually the day that the gamma squeeze developed. Thank you, VOX. And the average delta for Facebook was 440,000, which is actually pretty low. I would have expected that to be a little higher, but that delta is good. It's stabilizing. And so if we look up at the shorting, we see that shorting is in fact not yet increasing, maybe a little bit up here, right? But that's just like the daily trends. But the overall, the dark blue is relatively fine. But then right after that, right, we swing way up. So my takeaway is from this is that the shorting going on is actually to hedge the delta. So what better way to hedge than to short, right? You don't have to like worry about having the shares, I suppose. And we see that there's that, and that seems to line up. The hedging matrix shows us that it's healthy. We're not volatility dominated, so that means every time the price increases, say like the price increases and volatility increases, the options dealer purchases 106,000 shares, whereas if the price decreases and volatility increases, the options dealer sells 106,000 shares. That's pretty healthy. Or I'm sorry, that's not healthy. That's a gamma squeeze. But at least we're not being dominated by volatility right now, which would be a concern with these. Speaking of those, in the money puts, it seems like we have a 50-50 split on if those are long or short. At least that's what the math comes out to, and it's slightly concerning. This is a little bit more concerning. You don't want those dealer long puts to become in the money. So those sold puts on Facebook, these are the ones that are really going to start screwing with volatility. So that's the data dive for Facebook using a deep dive stocks report. So the takeaway points is VOX does seem to be rising into stability. This probably has something to do with the fact that the gamma squeeze is coming to an end. I think, and the snap graphs seem to agree that they're tentatively bullish, right? Maybe like just neutral if these two cancel out. The price is well behaved, even though it's been declining, so that's a good sign. Obviously you don't want a stock that's just like moving through those dashed lines nonstop. That's not good. The shorting is increased, increasing, but I think it's mainly, it seems to me like it's mainly due to the hedging requirements. The options layout is tentative, right? So maybe this month's OPEX will kind of clear out some of these options. So I would say my takeaway for Facebook is that it does seem like there's some signs of stability returning. Gamma squeeze is diminishing, but right now it's not out of the woods. If volatility skyrockets, those in the money puts are going to start causing some havoc. The gamma squeeze is still present, so like all gamma squeezes, the main price action for them is down. So it's still here, and maybe, you know, softening up a little bit, but here is here. So yeah, that is the takeaway from Facebook. You know, returning stability, but not out of the woods yet. So we'll see how this plays out. Thanks for joining me, guys. See you.